Hi traders, good morning, good afternoon, good evening. I hope all of you are doing good. In today's session, we are going to discuss about Bank Nifty and Nifty. We will analyze this on multiple time frame, and I will also show you a tweak in my setup, which I have disclosed in the last video. If you have not seen that video, please go through it. And it's a setup which you can use it for option selling on Nifty, and it is a highly profitable setup which I personally follow. So please do check out the video which is available on YouTube. And without wasting much of your time, let's get started with our analysis on Nifty. As you can see, we are on a weekly chart of Nifty, and on a weekly time frame, super trend is showing us bearishness that is starting off 21st February onwards, and Nifty made a peak about 17,008. High is about 18,114. This was the peak, and from there we started falling. So what is the current trend on the weekly time frame? It is definitely bearish. The price is below its moving averages, which is our setup is about 50 and 5, 20 and 200. So this yellow line what you see is a 5 period moving average. Okay, this is a 20 period moving average, and this is a 200 period moving average. Okay, and this super trend I use 14 and 3. 14 and 2 we used to use before. Now I've changed it to 14 and 3 because there is a lot of volatility which has come in Nifty as well. So to avoid frequent stop loss hits, we have changed the setting to 14 and 3. So you can follow this. I'll show you the importance of that as well. So here on a weekly time frame, definitely you are seeing a bearish trend, but you also need to understand that this is a 50% candle. Okay, these two candles are 50% candles, and the market will take support at this level. Now if you go back left, this zone was tested here as well, and it has created 50% candles here as well. And then if we go back, we will definitely find some traces of support. So this is at peak now. This is at the best possible position for Nifty, and I'm sure this is going to find some kind of support here. If a weak candle closes above the previous week's candle, then we can expect a complete reversal. So let's watch for that. Now on a daily time frame, if we see, we have formed a very narrow candle on Friday. Okay, so this is consider this as a kind of reversal candle. Anything can happen from here. Either you can see a big red candle, full bodied candle like this. Okay, so then it will become a drop, base and a drop. Okay, and base formation cannot be one candle. There can be multiple candles here for a couple of days. Small candles can come, and then there can be a drop, or there can be a rally. So then you can expect this to be base, this is a drop, base, and then a rally or a drop. So two things can happen. But yes, base formation, daily candle, one candle is not enough. But let's look at overall global scenario. Before we conclude anything, we need to look at how our global markets are doing as well. And then let's go to a smaller time frame, which is a 1 hour time frame. Okay, 1 hour time frame, as you can see, it is consolidating in the same range. See, whenever you see candles away from 5, natural tendency that it will come till 5 and take us resistance and then go in the direction. If it holds 5, then there is a possibility it will go till 20 period moving average, and from there it can go up to 200 period moving average. So this is the way you should start thinking. Now let's look at this on a 15-minute time frame. Okay, 15-minute time frame, entirely bearish. This whole day it was consolidating, and price was not able to hold the 20 period moving average. So let's see if on Monday if the price opens anywhere near this super trend, we can immediately see a sell-off from here coming down, or if it opens anywhere above this super trend, okay, then we can expect some kind of support. This super trend will act as a support, and this moving average will also cross over super trend. Then you can expect the market to come till 16,900. So this can be your level. And then let's look at this. See, always remember, if you are doing any kind of option selling especially, then you need to always uh, take a trade basis your 15-minute super trend. If your 15-minute super trend is bearish and your 3-minute super trend is also bearish, okay, then you sell a call. Okay, always remember rule number 1, 15-minute super trend has to be bearish or bullish, whatever it is, bearish or bullish. Then number 2, 3-minute super trend has to match 15 minutes. If 15 minutes is showing bearish and the 3 minutes is showing bullish, then wait for the trend to change. So here it was apt. I'm sure if you have sold any call, then you would have made some money till here. And RSI also plays important role here. And as we have already seen a gap down, it would have consolidated for some time, but yes, theta decay would have given you some kind of money here. And here 15 minutes was bearish, but this is bullish, so there's not a trade which should take. You can only trade when this matches the 15-minute time frame. So remember this. Okay, so this is about Nifty. And with this kind of thing, we need to look at the overall global market and see if it opens gap up or gap down. Then basis that only we should take a trade. And how we are going to take a trade? We will look at the first 15 minutes. If the super trend is showing bullish and this 3 minutes is also colliding with that and becomes bullish, then we short put. Okay, and now we go to Bank Nifty. Bank Nifty on a weekly time frame is bearish, but yes, there is a good support at this level. This is a 50% candle, so this is in a good support, and there was multiple times price has come into this, and it has spent a lot of time here, so definitely it's a very strong zone. But yes, there is some bit of room for it to fall into this and then consolidate and then move up. So it might be very volatile in this zone because it will consolidate. Now coming to a daily time frame, again same kind of scenario. This is a zone. Move to the left, whichever is the 50% candle, you can mark it. So this is a zone, and the next zone is this one. This is the next zone. I hope we don't touch this 33,500, but let's see how is the global scenario, because global scenario is not looking good. Inflation is going high, and overall economies are going down. Let's see what is investing.com telling us on the global markets. So Dow Jones was 98 points down, and it is US 30 is about 162. And if you look at all the global markets, they're all red. Okay, so we might open gap down basis this. We can also see Dow Jones here. Yeah, this is, see, it's again at a support level, so there might be a When it opens on Monday, there might be a positive push on the upside, or if it breaks this level, then our markets will also start falling big time. So keep a watch on Dow Jones. Now coming to the open interest part, we can see Nifty has huge call built up on OI change, that is on Friday also there is huge call built up. I don't see any put writing happening here. Overall puts are also very less, so expect, even the OI data is saying that it can be a gap down. And what is the total put call ratio on Nifty? 60 minutes, even puts are higher, sorry, calls are higher, put writing is not happening, and put call ratio is 0.87. so this is definitely a short build-up which is happening. Cumulative OI trend is also negative, the calls are higher, puts are lower, and this I'm checking only for the 7 strikes, which is at the money and +3 and -3. Okay, and then let's look at short covering happened in the last 60 minutes. With 1 lakh OI change, they were able to move the price to 56. Here initially they opened the day with 6 lakhs OI change, and they were able to bring down the price to 252 rupees. After that 2 lakh 56 rupees, after that 69, then 4 rupees, 33,000 15 rupees, 14,000 19 rupees, 42,000 again 29 rupees. They were able to change the price. Short covering happened with 1 lakh 60, but only 56. So this doesn't give a confidence that it is going to go up. Okay, it can go down only, looking at the overall OI build-up. So let's look at option chain. Option chain of Nifty has about 16,000. It has open interest of about 32 lakhs. OI change is about 12 lakhs, and 16,400 has 25 lakhs and 14 lakhs respectively. So there is a 400 point difference from this to this, and on the upside it has 16,700, which has the highest open interest built up. So this is a 700 point range. So what I can see is that if market gaps down and starts going this side, there can be a good support at this level. It should not break this level, and if it opens above and starts going above 16,700, then we can expect a big rally, because the open interest is high, and short covering can trigger rally from here. Short covering plus long build up can trigger a huge rally. So after short covering, always look for long build up. If there is short covering and then short build up, it can go down. Okay, so now how do we use this? So I hope you have noticed the kind of tweaks we have done to our trade setup, which I have mentioned. Okay, so the advantage of using 14 and 3 is that since it is more volatile, the kind of supertrend crossovers are very high. Okay, so to reduce that, we have changed the setting to 14 and 3, so that we can understand the trend clear and stay in the trade rather than taking the stop losses and getting frustrated. So even with 14 and 3, we are able to see 1 2 3 4 times it has hit on Bank Nifty. So but if you see it on Nifty, spot, it is only 1 and 2. So if I change this to 14 and 2, see, this is 1 2 3 4 5 6 7 times it has hit. So this is the reason, basis the volatility of the market, we should change our setting so that we can remain in the trade in the proper direction. So this will give you a better entry. You can also go back and see how many times the crossover has happened. This is 1, this is 2. Okay, you sell a put, stop loss hit, you sell a call, then continue the trend for the day. Same thing happens here. Sell a call, it continues. On trending day, your stop loss, your super trend stop loss will not be hit at all. It will continue in the same direction. So this way you can follow this trend and make some money. And also guys, you see, whenever you get into the stock market, you always have that tendency to find the right strategy, always searching for the right strategy. The moment you see a new strategy, you hop onto it, and again after few days you don't stick onto it, then you leave the interest because you're not making money, and then you jump onto new strategy. Now understand this cycle. This cycle can go for long, many years if you don't stick to one strategy. Okay, always try, make your own strategy, make consistent income for at least 6 months. That means 6 months you should be profitable, so that you become comfortable, or then try to improve on strategy, or make it an algo. Today people, what they're doing is, they are first of all, they're not finding a strategy which is consistent, which they are not able to make money for 6 months or 1 year, and then again they are jumping onto algos. Okay, once you jump onto algos, again there is a new kind of searching which happens, because you're learning the algos simultaneously, and then your hit trial is what you're doing, losing your consistency. So first advice, you need to get a strategy which gives you consistent income. Only then, if you do not have time, then go for coding it in the algo. Because once you get into a coding which is not your domain, you need to learn that language, understand the nuances of each and every bit, and then only execute. Algos are good for people who are who are understanding of the coding is good, and who have been trading in the market for a long time, and they are making consistent money. If they want to set up a business, they can get into algo and give the same kind of output to the retail investors. But there are no shortcuts in the market, so please don't try to find an algo which is going to give you money without knowing the psychology of the market, without knowing the market, without understanding the market, because your expectation will be very wrong. You go to any algo, you will try to see that, okay, I'm making money consistently or not, which is not going to happen. Consistent money is it's kind of very difficult thing, and it will only come with the trading psychology if it is right in you. If you understand that market is about giving and taking, it's across the table. There is somebody who's losing and somebody who's winning, and for that there will be tough competition and there are tough systems, because if you're trying to take money from big institutions, obviously they're going to come and implement something which will not allow you to take money. So machine learning is always learning the patterns which a retail trader or retail algorithms are writing, and they're always reverse writing to those things. So your algos will not work all the time. It is only your consistency, your understanding of the market, and your psychology of taking the limited risk and taking higher advantage will help you. Okay, risk to reward has to be proper, and immediately you have to change according to the market. Only then you can survive in this market. So today, if you see, my Friday trade was absolutely very simple. Without making any adjustment, you could have actually made money if you have sold straddle on Nifty with your stop loss, because nothing happened here on Friday. Simply, usually people have tendency to see that Friday maybe they not be decay. I have sold a straddle which is like 30% stop loss, and the stop loss was not hit at all, and easily we could have made money if you have followed that strategy. And if you have followed my previous video strategy of selling a call here and exiting with some kind of money and selling a put here and exiting with some kind of money. Even then you could have been profitable. So that way you can follow these simple strategies. Don't have to run around and try to find the best strategy which gives you money every day. It is not going to happen. So you need to understand that your drawdown has to be limited, lowest, and you, even if your returns are not phenomenal, but at least 2 to 3% is great enough. 1:2 has to be maintained. So drawdown versus return ratio should be proper, only then you'll be profitable. So that's it for this week, guys, and I hope you're learning something new every week. Please do share, subscribe, and like my videos so that I get enough motivation to make more videos. Thank you so much for watching. Have a great day.